Welcome to another market review for the month ended January 2021. I will tell you this is a bullish month that defy the January effect to close higher, and I will tell you that the factors behind this movement are still intact, and some of them are overflow from the previous year 2020 that the market closed positively. And I will tell you that as we are going into the new month of February, market still has the sentiment and the strength to go up higher, especially as the market is looking up toward earning season. And this earning season, I call it reward earning season. The time dividend will come from quoted companies on the Nigeria Stock Exchange, knowing that more than 70% of the market has December as year end, the physical year of January to December. And these companies will be releasing their results to the market. On that note, we will sit back as we review the market and also preview what we expect to see in the month of February. That will also guide you on how to invest wisely going into the new month. But I will look at the market, in three perspectives. I will use the daily chart, I will use the weekly chart, and the monthly chart. But before I go further, I want to just give you the market data for the month. The month of January opened at 40,270.72 to close at 42,412.66. That means for the period under review, the market gained 2,141.94 basic points, representing 5.32% up or growth. It tells you that the market has really done well. And this is the first time in the history of Nigeria that the market capitalization is hitting 22 trillion, 22.19 trillion. The first time in the history of the market. Yes, we know that the listing of some high cap stocks and also the price movement of this stock between last year and this point has also added to the market. It's a good news for the market, and we believe that going to the new year that the exchange will do more to encourage more companies to list on the exchange, and that will be nice for the market. And as we speak, I will tell you that the numbers of gainers for the month was higher than the number of losers. We have about 96 gainers and just 11 losers for the period. It tells you that the market was really up. This is a positive market breadth to guide us going into the year. And the good thing again is that looking at the trading pattern for this period, those stocks that were lagging, when the markets were rallying in 2020, especially in the last quarter, these are the stocks that are now rebounding, and in this first month of the year. It's a good lead, and it's an indicator that those low cap stocks and the medium cap stocks, dividend paying stocks are rebounding. It tells that the market is changing, and that also is an indication that the recession that the economy is now, we are gradually coming out of it. Because when you see low cap stocks anywhere in the world, when recession coming up, it's a sign of confidence coming back to the system, and especially in the market. You can see that I will tell you the investor confidence in the market now is not a result of fundamental, because the liquidity in the market and at the same time positive sentiment have supported the price up, and this as a result of what the monetary policy, and that policy has not been changed. And don't forget that just 2 weeks, a week ago, just the past week, that the MPC meeting had their 2 months meeting, and they left all the monetary instruments unchanged. That again also that ushered this rally you saw here, that this 5 straight rally was because at the end of the MPC, even when the MPC meeting was going on Monday, because it's a 2-day meeting, whether the fillers enter the market, it changed the whole thing, that even on the day of the communique, market gained even 1.21, and that is the highest for the week. I will tell you that this information has also give the market a support. Yes, from here, I want to look at this chart, and this chart will give us a lot of information that will guide you so that you won't be panicking when you see this kind of trend in the market. Let's start from the month of October. October is the month that the market recorded one of the highest gain in the history of the market for the month of October 2019. But if you look at the trend on a daily chart, I want to take this rectangle chart pattern to look at. You can look at the market was saturated at this point, before it break out. And when it break out, it rally up to it form another sideways movement, it break out. But the beauty again is that when the market got to this level, we saw this another strong resistance. Market was struggling at this point. It came down, it came down to this point, but market was within this line. There was no real rally, but market pull back, no, stay down here, instead of here, rally small, but within this, no, this rectangle I've got drawn here, market was waiting for a pull, for a trigger at the same time, a direction. But when it broke out again, you see that the market had a straight up rally, and which came to the year end, which is the December 31st, that the market closed positively on that day. But on the first trading day of the year 2021, the market breakout, was up to record the high for the period of the first trading day of January, and that on the second day market pullback, and this legal for profit taking was going on because as a result of what we saw in the month of in the year 2020, sorry, because market was up and the profit taking was expected, which I also made clear to our listeners and our followers that the market people are about to take profit. After market has gained about 50.03 for the year. Profit taking is expected, and that is part and part of the market. And I see it's an integral part of equity trading. That means whenever you see profit taking, don't panic. It will give you opportunity to enter. But when you see a total decline, that is where you be. But when you see market form of a distribution, because after market has accumulated, there's always a markup. That's why market has a five phase. That phase will have a phase of accumulation, a markup phase, a distribution phase, and a what? And a decline state. When market accumulation state, that is where you should be taking position. The markup phase, markup phase is also where market rally you are bound to take profit. And when you see market in a distribution, at that point, profit taking activities is there. But when you see a decline, that is a full pullback and price correction. Actually, you are taking your profit when you see you notice that distribution stage of the market. Then you can see that the market is in phases. As we speak now, market got to this uh, strong level, and it resisted to break out at this point, and markets are trended here too at the same time. After it had pulled back, yeah, the market was the same in the same triangle again. You can notice how many pullback here, how many triangle markets have observed here before this pullback. And also, I'm telling you, before the early filers will start hitting the market, the possibility that the market was going to start trend at this point, trying to resist the uptrend at this point is there. But the possibility of market going up, but immediately market breakout 43,333.22, that will tell you that the market is set to break out the height of 2018. Remember that in 2018, the market recorded almost 45,000 in the first month of January, and that is likely to repeat itself, and a breakout will come if the earnings beat expectation. But another thing you should look at before we go to weekly, that the earnings that are coming to the market, yes, last year when this earning was coming, there was panic, but that was the first time. But people seeing this earnings this period now, the market is not panicking, but rather they are looking at the numbers and trying to form opinion, which we're going to play out in the week we are entering. But I will tell you that the results that came have given insight what we should expect from the audited account. But most of the numbers that we are seeing, they are unaudited account and the fourth quarter. This as a result of the new regulation from the NSE that you can release your first quarter within the first month of the first month at the end of that quarter. That means December is the end of the fourth quarter, and before the end of January, if you are not releasing audited results, release the end of that fourth quarter to the market for us to know how you are performed for the first quarter. And before end of October, you can now release the audited account. But most of them are coming together, unaudited fourth quarter and unaudited full year 2020. It makes things better and easier. This gives insight of what is expected from each sector and the companies that we are positioned already. Now, from the numbers we are seeing from the banking sector, yes, I will tell you that number they are missed and weak from the banking sector, but that should not send any panic to you if you are in the right banking stocks. And I'm telling you that most of the bank also, especially the Fugas, they might likely surprise you with growing their dividend, or they leave their dividend flat as what they paid in 2019. That also you have in mind. From the industrial goods, we have seen already that some of the prices of equity there are grossly undervalued and mispriced. and those ones that are mispriced are likely to continue to go up. One, if you compare the number we have seen from BUA, yes, BUA have almost the same share in issue with with WAPCO. But if you look at the performance of BUA, BUA moved from, it's a good growth in terms of top line and bottom line, but the earnings as at full year unaudited is about 2 naira 8 kobo. And if you compare that to the company, third quarter of 1 naira 58 kobo, that means it does move with about roughly 40 something kobo in the last quarter. That will give you 2 naira 8 kobo. But as we speak, WACO has about 1 naira 75 kobo as at the end of third quarter. Yes, WACO with the result we were expecting was likely to hit 2 naira 50 kobo or 248 from the number we were expecting. And if that is achieved, I'll tell you WACO has potential to go up more. And knowing that, I said it earlier in this program, that if you take the series of right issue that were carried out in the previous year by WACO, I will tell you the recent one we can see have done around 12 naira. But before this one, the last one was done around 45, 40 naira, right issue. And you know that in WACO, the minority shareholder that had about 68% or 64% of WACO, they took those rights, and they are still in WACO. They've not divested from WACO. They also would like the price to get to that 14 naira, even to know that yet they what they bought their right, they have gotten it back. I think that would make a lot of sense. For me, WACO is ready to touch 38.42, which is, if you are in WACO, you don't need to panic. Just hold your position in WACO. That is for the industrial group, from results we have seen from BUA Cement. Yes, if you are in BUA, personally, don't need to rush out. But know that BUA movement is not because of the fundamental, it's because of the shareholding structure which has supported BUA, and that other companies like Nestle has enjoyed. When you have a company that has a tight shareholding structure, the price will not go down easily because the share outside is not much, it is in few hands, but just that will support the price. You can see it has played out in a lot of companies that their share in issue is in few hands. Even when the market is down, we call them, most of them are defensive stock in nature. Stock like Okomu, stock like Presco, this stock, their share in issue is small and the shareholding structure is tight. There are many of them that have a good institutional investors in them, and they have a good chunk of the share to them. This for WACO. But for stock like the insurance company that are coming, also because of the capitalization in the insurance sector, these are other sentiments that are driving the price, because those local stock and the ones that are a bit up the big names in the insurance company, they will not like to match without good basis to negotiate with them, whoever they are matching, whoever they are acquiring them. For that, you saw that movement in the insurance sector, that insurance led in the month on that review with about 29.99 growth in terms of the sectorial index performance for insurance. You should have that in mind. But you have to be very careful when you are buying insurance stock. I will tell you that even as we speak now. These are the things we have seen. If you see the one that came from the food, the consumer goods sector, yes, there's miss and also there's divergence in terms of performance. If you see the result that came from Cadbury, that came from Unilever, I will tell you those numbers are not too impressive. Apart from Unilever, that their fourth quarter was okay, yes, giving an insight of what will be going to the future. That is for long-term investor, but for short-term, I don't see somebody will move Unilever much, and also their dividend we're expecting is very slim if they will pay at all. From Cadbury has shown a sign of a decline, and that will likely affect their payout, that will put their price down. But if you look at that same industry, result from Flour Mill was fantastic, beat expectation, and not only just the third quarter. If you look at Flour Mill first quarter, second quarter, the results have been in the uptrend. Look at the Honeywell that has been in uptrend. You look at the Northern Nigeria. Yes, it might not be done because of the flour alone, but I'll tell you that flour business are supported in one way or another their business. Because if you look at something like Honeywell is not into sugar. I can see that their performance in the last quarters are still okay. We're still expecting their results, and I believe that because Dangote Flour Mill is diversified into agriculture, into sugar. They have logistic business. A lot of things going for Flour Mill, and that reflected on their number. And that has given us insight if the sugar aspect of the business has contributed more to the bottom line of Flour Mill. That gives us insight that what we should expect from Dangote sugar. For me, if you look at Dangote sugar price around 20 naira, it's not a bad one because there's liquidity in the market. But compared to the dividend they paid the previous year, 1 naira 10 kobo, one has to also be very careful. But on the strength of number expecting, if number will go in the same direction of what they did in the second quarter and the third quarter of the 2020, we expect a better number forward from Dangote Sugar. And also Dangote Sugar, we expect if their number is good for them to grow their dividend to almost around 1 naira 50 kobo. If no, the way it is, because if you remember what happened in NASCOM paid about 140 before the price before they adjusted the last one they paid to 40 because of numbers. You can't give what you don't have. But if we're expecting a better numbers from no from Dangote Sugar, we expect them to grow their dividend. That will also a place to look at, looking at the number that have come so far. And then if you look at the one that come from the service sector, from the service sector, I can see that the numbers are mixed. Look at the one that came from from NACO, and then we're still expecting from Cavaton. I'm not seeing from Cavaton, but that of SACO, so that these numbers are not encouraging. And that's a reflection of what the COVID-19 impact on that sector. The airline business, the hospitality business, know what happened in the year 2020. We don't expect much from them. For the sector that is looking up now again, I would say the healthcare sector. Healthcare sector and agriculture sector, their numbers are really, really impressive. That means you have said it earlier in this program that these are the sector that will benefit from what is happening. The government is also trying to invest more into this sector because of the second wave. Not only that, the vaccine that we're expecting, we don't expect that the vaccine that will come from US, London will get to us on time. Even when it gets to us, because then they are trying to look inward to produce that vaccine here within the nation. That would be a plus for those sectors. That means as we are seeing their number coming, we need to also take position in that sector. Especially stock like me and Baker. I'll tell you, me and Baker, if you remember, like 5 years ago, when they signed the vaccine business contract with the federal government, then the price moved as high as what as 6 naira 20 kobo. Now, if as the government forum have advised that let's look inward and manufacture our drugs here, and you know that the government will also inject more funds to that sector to encourage them to go into vaccine production. That will also help because they have the facility to produce vaccine already in me and Baker. I see that company benefiting more, and also they are close to government. Why Mr. Gregory, their former chairman, is also. But I see that it will go for them. You can see number from fixing very fantastic number unaudited. It's a good number. These are what you look at. The one that came from the agricultural sector, the agro business. Look at the number that manifested that manifested from that emanated from livestock fees, and the one that came from Okumu. That giving insight what we're expecting for that. So that means if you see price of stock like Presco at that price, what Okumu is almost at 93, Presco at 74, it tells you that there's room for Presco to go up. That means if you are in Presco, you need to go, don't need to jump out from Presco. That is for that. Then I'll quickly go to the weekly charts. Yes, and before I move out of this place, I want to show you the money flow index is very important. Or also let me just say something here. If you look at this, MACD has given us sign where the market is going. You see, when the market was coming down, see MACD was down, but now you can see MACD crossed to the cross the signal line here, and it went up. You can see the trend here. If you move from here to here, you can see. Then when it started coming down, when it slowed down, you see it came down. It went up here. But this recent uptrend was in here. You can see that MACD is trying also to cross each other from below. Not only that, the MACD that has been on the bearish trend on the daily chart is almost crossing to the other side to become a bullish MACD. That is good. Not only that, like I said, money flow is very important when you are investing. Look at this money flow chart here. This money flow chart here is very important for you to look at. Look at it here. You see the money flow for the period that market touched, even at the peaks. Get here. Even the current peak that we had, look at what market came down before this new rally. Now you can see that funds are entering the market. For market to be reading 61.27 points for money flow, there's money on the daily chart. Money is entering the market on a daily chart, on a weekly, and on a monthly chart. That makes this trend for me strong, and that we should not panic on that. Let's quickly look at the market on a weekly chart. If you look at this market on a weekly chart, I will tell you, yes, look at this chart here. Let me bring it so that you understand it. Yes, let's cover here. You look and see that the market here, you can see this what we call a zigzag movement. If you see down here, market was down, up here, market was down, now it's going up again. And this is what we call a V-shaped market recovery. That's that the V shape is just then it has not gotten to where it will become V. V has had to meet the top, the two V have to meet up here before the V shape will complete. And I see that the market is likely to break out a resistant level here. Once that is done, market will touch the height of 2018. That was in January. The market gained almost 15% that year. No, that will tell you where we are going. Don't forget that the market rally from February has broken different resistance level to this level, and that tells you that the momentum in the market is tinted as far as those factors, especially the low interest rate from the monetary policy and also low no yield in the fixed income and debt market. The treasury bill has also supported the market because funds are looking for where they can generate more returns for the owners of the fund. For that, we expect the market to go. But don't be carried away with this rally. Don't be carried away with this rally because the possibility that when results start coming and there will be sell-off is there. But we can't stay for now because the market structure have changed. Now that we have the local institutional investor holding the market, there's a bit stability in our market. Since I'll tell you, since the last quarter of the year 2020 till now, there will be stability. If that is maintained, we might not see much when results hit the market, but unless there's another information that will be coming before there will be a pull out of funds from equity market. As we speak now, I think the market remains the market that is up here in Nigeria, even in other clients of the world. For that, I expect that this trend will continue. But once it gets here, before you form the complete V, the V-shaped recovery of the market is still on. And I've mentioned stock that will drive this V-shape in the last seminar we did. And that means if you are not getting the material for that seminar, you need to get. But the material that I will recommend at this point, especially as any season is about to kick off, we're around the corner already in terms of any season, get the mastering any season video for any market situation, how to invest profitably with any season. If you know that, that means every quarter of the year you'll be making money. It's not fully there, and any season is any season, and we'll have four quarter in every year. You need to position yourself and invest wisely from where using any season. Get that material, that video. I'm telling you, the rate of the mind shows that Nigerian investors are really hungry for knowledge to make wise decisions and take advantage of this market that is going up now. And don't be left behind. Don't be left out. Get that video. It will help you to take informed decision, and that will go a long way to support you on this uptrend as we speak now. That is for the weekly chart. And also, if you look at the weekly market here, you can see that it is already a bullish trend, strong and strong. I'm telling you. But we want to quickly look at the money flow on a weekly chart. Look at the money flow on a weekly chart. It's still very, very strong. Very, very, very strong as we speak. You see, it had pulled back a little, but now up. When it pulled back, when the market was trying to correct, when the market got to a resistance level, which I've showed you on the chart, but now the funds that entered the market, that funds is back to the market again after the MPC meeting. You can see that the fund MPC meeting was held, and you can see on the 18th of hold on. Let's get it. Okay, this is a weekly chart. Yeah, since on the since January, funds have entered the market. But I think after the MPC now, it become you can see that the rate because market money flow index have touched as low as 40 the month under review before coming up. That tells you that funds is back to the market. To tell you that people are still taking position. Equity and the equity space is enjoying funds from other windows, which I believe will continue till the end of earnings season. We'll quickly look at the monthly chart before we round up for this discussion. Monthly chart, if you come here, look at the monthly chart, it will tell you exactly what the market looks like. This is a monthly chart for almost 6 years now. Starting from 2014, you can see the market performance for the month. You can see on a monthly basis, this is what market have done. But don't forget that you can see in 2018, after the January rally, market have been on the downtrend before a powerful rebound in 2020 April. After the market have suffered back to back 2 months loss as a result of coronavirus news, and market pulled back down here. But now market has reversed in the uptrend, and for a straight 7 month market has been in the uptrend. Tell that powerfully the market is enjoying some positive sentiment. But if you look down here, look at this MACD chart. MACD chart already review what is happening in the market. When the market rallied in 2007, you can see market was up here. MACD also was having a bullish word, a bullish signal. The histogram is above this signal line. But when it started coming down 2018, you see it crossed down and it lasted 2018 and 2019 before the market picked upward in April 2020. You see, that is when it crossed the signal line to the uptrend. And since then, you can see that it has been on increase, even surpassed what we saw in 20. If you draw the line, so that it has surpassed what we saw in 2017. It says that the momentum and the sentiment in the market are still positive and funds is still entering the market. If you go to money flow index and quickly we look at the money flow index for the month, you can see here that the money flow index for the month has been on what? On the uptrend since the month of since the month of what? Since the month of July 2020. After market pullback little in June, in July it picked up. Funds have been entering the market powerfully on a monthly basis. It tells you that there's no cause for alarm, but rather don't be carried away the market will go. Knowing that the market already is in an overbought region, that means when you have meet your target, don't resist to take profit. Taking profit does not mean that you don't know what you are doing in the market or the uptrend you miss it. No. Taking profit means that you know when to cash out, when to hold that money that you have made, and your capital will be intact. What you can do, you can take profit and also reinvest and think to position to another stock with the capital. That is good. And also, like what I advise my clients, when I'm making money in the capital market like this, don't let that invest back your capital. If you can do that, your profit, I mean, once you invest your body and the market go against you, both your profit and capital become a story. That's why when you are making money in capital market, you can also find way, unless you are smart, you can bring back. But I would advise that keep your money from something else, so that at the end of the day, you know that this is what I benefited from the market so period and so time. That is what I want to hear from you. Like I said, if you are not a member of Buy and Sell Signal, I think this is the period that if you go and subscribe, be among that so that you will enjoy all this update and at the same time you get the stock to buy on a weekly basis. The weekly trader, the one that you buy for 6 months and the one you buy for 1 year if you are an investor. These are already on the membership side. Once you pay, you get your login details and have access to them. But you know that the beauty of this is that if you look at all the sentiment report for the month of for the month of January, for the week and for the day, they are all a positive and having strong buy against sell. We have sell for the month under review. We have just 99 sell for buy and just 1% sell for the month. And if you go for the week we have about also 98% buy and 2% sell for the week. It tells you the market is weak. On a daily chart, you have 90% buy and 10% sell. And that is that 10% was on Friday. They are bound to be little profit taking, but I tell you the market is still strong because fund is entering the market and there is positive sentiment market in the expectation of what earnings, and also we do not look away from what is happening globally also to guide us. As far as the oil price continues to oscillate and remain above the coronavirus time, or breakout or news, around the February March, the price have gone above that. It tells you that this is also a plus for the economy and the government for revenue. For that, we don't need to panic. Don't allow any form of negative, especially the second wave news we are hearing, the rising inflation and the insecurity. Also, don't forget that now that the border has been opened, the inflation will naturally on its own come down and on its own. You can see the price of rice that was selling for almost 32,000 naira before the border was reopened is down around 23,000 naira to 2,000 naira. It tells you that prices of goods will naturally come down, and that will go because the inflation at 15.75 is alarming, and that is what people were expecting that CBN will adjust, the monetary policy will adjust their rate during the last MPC, which they said they are not ready now because they don't want the gain the economy have recorded to be destroyed. They want a consistent growth that can come out of recession on time. That's why they want to leave all the interest rates. They have left all the interest rates unchanged to make funds available so that companies can have access to cheaper funds, the private sector expand their business and employ more and create jobs to reduce insecurity. Because if there is job, insecurity will gradually on its own come down. That's why economy and policies have to work together to make sure that things work together, especially the monetary policy and the fiscal authority. If that is achieved, I'm telling you, 2021, despite the missed expectation that as forecasted, we'll see a better year in 2020. Now that we are seeing bull ascendance. Let's take advantage of this bull ascendance and position and make money from the equity. Thank you and God bless you.